Hello, investors and future investors. Welcome to the channel. For today's video, I'm going to show you how I use covered calls in order to make consistent income. In today's video, I'm going to be showing you the difference between covered calls and covered calls. Yes, there is a difference. I'm going to give you a step-by-step walkthrough of how I use these strategies. I manage the positions and always come out on top. Now, if you're new to options trading, or you're trying to make some extra income with options trading in order for you to support that 9 to 5, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. The focus of today's video is going to be how I make consistent income selling covered calls, and I will show you how it's done even if the market has pullbacks or even if the market is in a constant decline. Now, if you're new to options, I suggest you pay very close attention. For those of you that are veteran options trader, I'm going to really quickly go over the covered call option strategy. In order to set the basis, I'm going to show you how I manage these positions in order to make exponential income that helps me grow my portfolio. That being said, let's go ahead and get down and dirty with options. Now, for today's video, we're going to be using none other than Robinhood Markets, ticker HOOD. So let's go ahead right now and go into the trade hood options to the bottom in order for us to open up the option chain. So the option chain is going to be this area down here. Now this area down here comes with several information, and all this information down here helps us make a very informed decision. Now, in order for you to do the cover call option strategy, it's quite simple. Let me just give you a brief rundown. You simply go to sell, you go to call, you select an expiration date. Let's just go with April 17th, just for example. This is not a real trade. Then, in order to maximize the efficiency of this particular option strategy, it's highly advisable you choose a strike price above the current share price right here. So we're just going to go up. Based on my personal risk tolerance, I like to choose a strike price anywhere from 80% chance of profitability upward. So let's just go with the 47. Now, when you do the covered call option strategy, you receive money right away. The money you're going to be receiving in this case is going to be 92 cents or $92. When doing options, every option contract contains 100 shares. So this is going to be 0.92 multiplied by 100, and that's going to give you $92. And that's how simple this option strategy is. Now, of course, there's a lot more that goes into it. And if you want to see the additional stuff that goes into it for more detailed videos, then feel free to search the channel for the covered call option strategy. Now, down to the basis of this video, let me go ahead and show you how I do the covered calls versus the covered calls. So for that, let's jump into one of the covered calls that I already have. Okay guys, so here we are on one of my covered call option strategies. I'm going to walk you guys through this as simple as I possibly can. Now, as you guys know, on this channel, I keep my videos extremely simple so that even a beginner could understand what's happening. But I'm going to become a bit more technical here to show you guys how I actually manage these positions. So as you can see here, I sold one covered call at a $47 strike price on Robinhood, and I received income of $95. Now, this $95 here is mine to keep no matter how this trade goes. That is the nature of the covered call option strategy. Now, a bit later on down in time, Robinhood decided to decline once again. So what I did, I took the exact same covered call. I decided to roll over the position. Do not get confused with rolling and all these kind of things. These things are extremely simple to understand. So I'm just showing you how I manage this trade. So I did roll over and I secured an additional $90 in addition to the $95 I already received. Then the market decided it wanted to decline once again. So then I went ahead and I closed out the position. I closed out the position and I paid $13 in order to close out the position. That resulted in me locking in some gains. As you guys know, the name of this channel is Investment Gains. There's nothing I like more than to lock in my gains. So by closing this position, I sold my call for $13 and I locked in my gains. Right along that very same day, I went ahead and I sold another call, this time at a 45.5. And once again, I received some additional money. This time is going to be $53. Now, this $53 I received and the gains I locked in was pretty much around less than an hour. So in less than an hour, I locked in about $150. Now, this one is not locked in as yet. Although the money is in my account, I always close all my options before expiration. So that is how I manage some of these trades. Now, at the beginning of the video, I did tell you that there are covered calls and there are covered calls. These covered calls I'm selling here is based on me owning 100 shares of the stock. Because I own 100 shares of the stock, I'm able to sell covered calls at such a low price and at such a very close expiration date. Now, we're going to go ahead and I'm going to show you the second covered calls. For that, let's go ahead and change the stock. Okay, the second stock I'm going to show you today that I'm selling covered calls on is going to be Trade Desk, ticker TTD. Now, before I go ahead and show you this second covered calls, I want to make sure you guys do yourself two favors. Favor number one, always make sure to do your own due diligence before investing. And favor number two, always make sure you have an exit strategy before entering any option trade. That being said, let's go ahead and show you the second covered call. Now, with this covered call is based on me having a leaps option. First set of covered calls I had was based on me owning the stock, 100 shares of the stock. When you own 100 shares of the stock, you're now able to sell covered calls at a much closer price to your actual share price. Once you're selling those covered calls above your cost basis, then you should be fine. Now, when you're selling covered calls based on a leaps option, it is highly advisable that you go way higher than the current share price or your cost basis of the leaps. And you could get that center by going above what's called your break even. Once again, if you guys want detailed videos about all of this, just search the channel for the PMCC option strategy. Now, I just showed you the covered calls with Robinhood. The shenanigans I pull off with Robinhood, which is closing an option, rolling out the option to make additional income, and selling covered calls so close to the share price. All those things can be done if you own 100 shares of the stock. If you, however, are selling covered calls on your leaps option, then the covered call strategy should change. So, for those of you who don't know what a leaps option is, a leaps option stands for long term equity anticipation securities, or pretty much a long call that extends for a year and beyond. The whole purpose of a leaps option is order for you to buy a long call and keep it in your portfolio until the stock appreciates. Now, while the stock appreciating, if you need to make some extra income in order to just grow your portfolio, then you could go ahead and sell covered calls. The covered calls that you choose to sell should be higher than your break even number one, and it should be at such a high strike price or such a low delta that you do not put your leaps in danger. So I'm going to go ahead and show you this covered call right here. Let's go to view all options. Let's go to buy. Let's go to call. We're going to choose the strike date I had there, which was, I believe, was April 25th. Now I'm going to go ahead. I'm going to go ahead and find my original covered call, and that's above the strike price, and that was around the $75 mark. Okay, so here we are. So as you can see here, the share price is $54. My covered call price is $75. There's a huge difference between the two, which is 20 strikes away. Now, call me blind if you want, but I just do not see this share price getting to this strike price by April 25th. And even if I am wrong, then I'm going to benefit once again from what's known as investment gains. My investment gains is going to be the difference between the $75 strike price and the $54 share price. I'm going to multiply that by whatever the delta was that I bought this leaps option, and that is how I make money. So I went ahead and show you guys this, how I'm managing these covered calls. I usually don't make these videos because the whole purpose of this channel is to try to show you how to make money consistently with options trading. So I keep the videos as simplistic as I possibly can, as to not to deter you and to help you learn stuff. while growing your options portfolio. Now, if you guys have any questions about covered call option strategy, the PMC option strategy, or any income generating option strategy, and you guys like how I manage these trades and you guys like how I make consistent income, then go ahead and join the weekly income team. I do have a free newsletter that I send out every single Monday. And if you guys need a one-on-one session with me in order for me to show you how you too can make money trading options safely, consistently over time, then go ahead and book a call with me. The link is in the description below. And until the next video, keep pushing your investments.